Let's turn our attention to the equities market now. Bearish sentiment persisted in the market on Wednesday, causing the total market capitalization to decrease by 621 billion naira. This decline marked the second consecutive section of falling in the market capitalization. The all-share index recorded a loss of 1,142.26 points, translating to a 1.75% decrease, ultimately settling at 64,167.37 basis point there. Additionally, the market capitalization contracted as well, bringing the total value to 34.91 trillion naira. Now, the decline was influenced by losses suffered in medium and large capitalized stocks, including companies like Dangote Cement, NASCON Allied Industries, MTN Nigeria Communications, Eterna Oil, and then Multiverse Mining and Exploration. So let's get talking now. We have Ambrose Omodion, Chief Research Officer, Investor Consulting Limited, joining us now via the telephone. Thank you, Ambrose. It's good to have you again. If you look at the bearish sentiment which extended on the Nigerian equities market on Wednesday, quite a lot of people are seeing that it looks like the bears are coming back to the market now. So what's your take on this?
Yeah, actually, we have seen kind of a bearish momentum in the market in the last 2 trading days. Yes, before now, market has remained above the signal line, or what we call the uptrend. But yesterday, activities as a result of the market pulling back by almost 1.75% as a result of sell-off and highly priced stocks pulled the market down yesterday. And for me, I would tell that investors should not really panic at all, especially if you have your plan that you are trading. It's expected that any market that have rallied for almost more than 3 months in an uptrend, they are about to do this kind of activities of profit taking, sell-off, for them to rebalance their portfolio, especially after seeing the half-year result that emerged from many listed companies. It is time for the investor to reposition their portfolio in line with these numbers. And also, all eyes are still on inflation data that are likely to hit the market next week. Meaning that, this week, yesterday, we saw that the Treasury private market auction, we saw a decline in the rates and the yield. These are signs that, yes, the government is, the position that they want to reduce borrowing from the financial market, and also reduce the interest rate to drive the economy. If that is perceived, going to the future, we might see funds leaving the fixed income market to equity space, especially towards the end of the quarter, where the quarter number we are expecting might see a rebound. For the investor, it's an opportunity for them to start putting your portfolio in that regard, or in that direction. So at the end of the quarter three, the same end will put your price higher. For me, this is not a bad market at all. As far as the market is trading above 50 days moving average, the market is still strong. Because anywhere in the world, 50 days moving average is institutional investor indicator to see that they are still interested in the market. But when you see market breaking down, 50 days moving average, tell that institutional investors are not playing that market again. But so market remain above that funds that in the market are still okay. Despite that, we are seeing the funds moving because of also this big high capital stock losing in terms of a sell-off. That's why you see money flow looking now. But I believe that as far as the money market is above 50 days moving average, there's no cause for alarm. But one thing is very, very important. Don't just invest for investing. Have a goal that's guiding you, and also have a plan that are training. You know where to take your profit, and when also to cut your loss when your position go against you.
Okay, so it's good that you talked about the fact that what we're seeing the market now, it's not as if the market is bad. It just profit taking or just a pullback. But let's talk about the sector to watch out for in the coming days. We don't know that some companies are already releasing their results, the half-year result, and of course we've seen some results in the market as well. So which of the sector do you think is driving the most impressive result in the market?
Actually, I would say it's not only set up. I say all the service companies in Nigeria have really performed well, despite the ongoing reforms in the economy that have brought about the unification of exchange rate, which has thrown some of the sectors also into it. Some of despite that reform, they are still posting positive number. It tells you that such companies that are posting positive number, even when we're seeing this FS revaluation, some people are posting FS gain, some posting FS losses. This says that those companies that are after in this situation, the ongoing reform, that those working for them, and if that continues, they're ready to post a better number. For me, these are the sectors that investors are looking at. But the banking sector has performed, put the results they have released so far. But all eyes are still here to release their word, especially in the first banks like first bank,
okay,
which will be Zenith Bank. All these are well expected, and also and Stanbic to pay into the dividend. All eyes on that sector, because we have seen results that came from that sector that have used a lot of FS gain, and also the high interest rates that they were enjoying all this while. What interest has improved. At the same time, they are better the numbers we are seeing from the sector. So also to expect the dividend. If that happens, it will change the face of what. And I believe that because in the economy, not remain the engine of that economy. For that economy, whether it's going booming or it's on slowdown, back now to benefit from it. But now the reform so far has been the bank has been the net gainer for that it's a sector to watch. Yeah.
Okay. Let's look at some top gainers yesterday and the top losers, if we can have that on the screen, and so we can take a look at it. If you look at what is on the screen, we have Omatech, you have Gain Insurance, you have Tantalizer, you have some other stocks there, as well as, okay, on the flip side now you have NASCON, Multiverse, John Holtz, Dangote Cement, Uni Insurance as well. So talk to us about what is expected of the market, the direction today, and if you look at the direction already, so what's the market, what's the performance of the market at the moment, just about 2 hours, almost 2 hours into today's trading?
I will tell you that chart is dominated by the local stocks. It tells you that something is happening when that local stock, which also is a sign that the market is weak. And also the volatility.
Hello, Ambrose. Oh, there. It looks like we lost connection with Ambrose there. But Kings just have.
We have seen about 1 billion, we have seen 500 million, we have seen 100 million. But now we have seen 200. That volume is down. That means most in the market are watching. And I don't see that as a big deal, because the people that provide funds in the market, we call them smart money, the PFAs, and also other fund managers are still digesting the number that were released so far. When they come back to the market, we will see improved volume. Like I said earlier, that now we are seeing that TradingB rate is declining. It is making a plus for equity market. But what is very important for investors, now that we are seeing that local stocks are the ones dominating the market, you have to play with caution, because they are very volatile. You can jump into sell become a problem, but it's good that they are there so that it shows that they are still in the market. But when they have a plan and know how to trade this local stock, because they are too volatile. The idea is you can make money in them, also you can also be trapped and so that means you must understand what you are doing with a local stock anytime, any day you are doing local stock. For me, it's already market has opened in the green. I think it's a lot of loss or sell down or sell off in the price or in the shares of Dangote that market yesterday. This morning, market has opened in the green. I believe that at the end of the day, we'll see how market is going to be. But at this hour, market is already in green. But I believe that during the day, if we see more buyer in those high cap stock again, or blue chip company, we might see the market will come slightly in green. But if we see continued sell off in highly priced stock, we might see market also extending the bearish trend also yesterday. But for me, the market, I said earlier, is a good place to play, but play with knowledge and with information.
A good place to live it. Thank you so much for your time. Ambrose Omodion, Chief Research Officer, Invested Consulting. Thank you for coming on the program. Have a great day.
Yeah, thanks for having me.
You're watching Business Breakfast. We're broadcasting live from our studios here. Here's what's coming up after this break. President Bola Tinubu has announced an ambitious initiative for Nigeria, aiming to increase the tax to GDP ratio to 18% over the next 3 years. Well, this move is intended to address the challenge of low revenue in the most populous country in Africa. This is our focus when we return from this break as well. Also coming up, the anticipated Tinubu subsidy packages sparked interest within the business realm, notably among small and medium-sized enterprises owners. offering the prospect of assistance and backing. These palliatives carry the capacity to redefine the path of SME advancement, investment, and other initiatives. And finally, also to come, oil recouped early marginal losses on Thursday, climbing to multi-month peaks as the market weighed supply tightness concerns with few demand worries ahead of key U.S. inflation data. Well, those are some of the highlights to expect after this break. So let's get talking in a moment. Stay with us.